This year's conference theme is Africa Forward, Forging New Alliances for the Future, as we found it timely in light of recent key trans-border economic and geopolitical events, including the signing of the African Continental Free Trade Agreement and the landmark peace deal between Ethiopia and Eritrea. We believe that now, more than ever, it is important for African countries and firms to forge strong alliances with each other and with partners beyond the continent to spur the next phase of Africa's growth and development. We realize that many of you have traveled from far and wide to join us this morning and are humbled and enthused by your presence. We believe that this year's conference continues in the great tradition of years past and that it will nurture meaningful connections across borders, sectors, regions, and ideologies. It is our hope that Africa Forward is a springboard for transformative experiences and that you leave energized and invigorated.
As the chairs of the conference, many of you may be familiar with our faces, but do not be fooled. We stand on the shoulders of an incredible team that have poured their time and energy into putting all of the programming that you see in front of you today. They willingly volunteered their time to take on conference planning in addition to their duties as MBA students with a full course load. We would also like to thank our HBS Africa Club Alumni Advisory Board, including Yuvin Neju and Kofi Kwakwa, who are with us today. The board has provided invaluable guidance and advice as we pull together the vision for the conference. In addition, we'd like to thank our sponsors who are here today, especially Boston Consulting Group, our platinum sponsor, as their continued support of the conference makes this possible for everyone here today. All of the media partners who have supplied us with the resources to be able to put on this conference are incredibly valuable to us as well. Finally, we would like to thank the team at Harvard Business School, from operations to media services to custodial services, for their continued support of the largest student-run conference at Harvard. We thank you once again for joining us, and we hope that you enjoy the conference. With that, I'd like to turn it over to Professor John MACOMBER, who will be introducing our keynote speakers this morning. Thank you.
Come on up, I'll introduce you up here. Thank you. Good morning, everybody. We're delighted to see you here in this beautiful hall on this cold New England morning, but we're glad to be here to talk about Africa. I'm a finance professor at Harvard Business School. I'm the faculty chair of our Africa Research Office, and I'm really pleased to see the level of interest that people have here now. I'm very happy to introduce our two morning keynote speakers. What we'll do is hear remarks from each of them. I'll ask them a few questions, and then we'll take questions from the audience, because it's always hard for us to know what's on your minds. I'll collect several questions at the same time, and then we'll answer them in bulk as we go ahead. So to my far right and your left is Mr. Vincent Le Guennou, and he's the founder and CEO of Emerging Capital Partners, which is the largest Africa-only fund in the world, and they're based actually in Washington because they can get to all these capitals so quickly, but they've had a long history of successful investments in businesses in Africa and exits, and I'll ask them about the exits because that's often the difficult thing to do. In addition to a quite long resume and experience in public accounting, Mr. Le Guennou is also a Harvard MBA, so we're happy to welcome you back to Harvard Business School. So thanks for being here. And I guess the organizational memory of all of you is pretty short, but Vincent thought he was coming back to Burden Hall, which was the hall that used to be next door, which is down and deep and dark and cave-like, and I think he was a little bit surprised to walk into Klarman, so we're happy to have you here. To my immediate right and your left is Mr. Momar Nguer, and he's a member of the executive committee of Total worldwide, sitting in Paris after having run Africa for many years. Total is a global oil and gas major, one of the largest energy firms in the world. And of course, energy is a lot of the story about the world and about emerging Africa. So we're really pleased to have both of them here today. Mr. Le Guennou, I believe that you have some remarks to make first. And then we'll hear from Mr. Nguer. I'll ask some questions, and then we'll hear your questions.
Thank you, John. It's always a pleasure to be back to this place, this time in front of you. I'm honored to be your guest today with my friend Momar Nguer, and I wish I had been a more frequent visitor to this conference, as it's a wonderful opportunity to reflect on the continent, its past, its present, and above all, its future. Your invitation gave me a great opportunity to reflect on my personal path since I graduated from this school more than 20 years ago. And I'm glad I can share with you some thoughts and some of my experiences. But because this year's theme is alliances, I would also like to think about people I met and deals and investment decisions we made as all part of a wide network of trust-based relationships. Allow me a few words about where I come from. I was born in France to a Cameroonian father and a French mother. I grew up in Algeria, went to high school and college in France, and spent most of my professional career in Africa. This background helped me cross bridges and forge partnerships, some would say alliances, between many worlds: Sub-Saharan Africa, Northern Africa, and the Middle East, Europe, and North America. And I don't mean this strictly from a geographic standpoint, but maybe even more from a cultural standpoint. A defining moment in my professional choices was a course on private equity by Professor Josh Lerner. I attended here. In fact, in my second year, I conducted a field study together with my classmate Cyril Conchou from Enco Capital, some of you may be familiar with him, on what was at the time a brand new concept: launching a private equity fund in West Africa. This course convinced me that private equity was a relevant asset class to help fund Africa's economic growth. I wanted to play a role in contributing to the continent's development, as do presumably all of you in this room. I wanted to have an impact in mobilizing capital. I wanted to help companies grow by defining successful long-term strategies, by recruiting the best talents, and delivering returns to investors. ECP, which I co-founded together with my partners Hurley Dodin and Karen Campbell, has raised more than $3.2 billion across a variety of funds since 2000, which we have invested in more than 60 companies and 44 countries, as you can see on the slide. All countries in green are countries in which we have invested directly or indirectly. The darker they are, the more investment we've made there. As you can see, Kenya, Cameroon, Nigeria, Ivory Coast have been important investment destinations for ECP. When we launched our first fund in 2000, there was something we already sensed at the time. Capital from the entire world would be needed to finance Africa's emergence. In fact, we were convinced private equity could prosper in Africa if we managed to be trusted partners between vast pools of capital from around the world and African companies. Then again, we had to forge an alliance between our investors and our investee companies. Someone else also shared that vision at that time, and he accepted to serve as chairman of the advisory board of our first fund, contributing his image to help raise capital for Africa. His name was Nelson Mandela, and we had the immense privilege to interact and to benefit from advices of one of the most inspiring leaders I have ever met. Over the years, we've been able to create regional champions in many sectors, ranging from financial services to infrastructure, telecom, and consumer goods. We also had successful exits through listing on African stock exchanges, Lagos, Tunis, Abidjan in particular. Our first investment was in Celtel, a company that today is called Airtel Africa. When Mo Ibrahim made his pitch to us, he had 40,000 subscribers. When we sold it 5 years later, it had 3.8 million. Today, it has 78 million subscribers. There were opportunities to help build impactful companies that could be regional champions for developing whole industries, and we set out to find these. And I'm going to share with you a few examples of what we have done and the type of regional champions we have helped support and develop. In the banking sector, our funds were early investors in EcoBank when it had several $100 billion in assets. Now it has 23 billion. We followed this up by acquiring Aura Group, and this is the slide you have on the screen, a banking platform which we expanded from 5 to 12 countries in Francophone Africa, growing the asset base by more than 9 times. Aura Group, whose CEO, by the way, was here a few years ago for a keynote speech, was successfully listed through the largest ever IPO in Abidjan 2 months ago. Eranov, which is my following slide, we developed a successful power and utility platform servicing customers in water and electricity. We have doubled the total number of customers from 2 to 4 million in Côte d'Ivoire and Senegal, providing millions of West Africans with their first connection to clean water and reliable power. We have also increased the electrical production capacity by 40%, from 900 megawatt to 1,250 megawatt, and we have developed a pipeline of 600 megawatts of new projects in countries like Gabon, Mali, Togo, and the DRC. Third example, IHS, a telecom tower company which had less than 800 towers in Nigeria when we invested in 2012. One of our colleagues had done a case study on the industry here at HBS, and he was convinced the business model could work in Africa. ECP identified IHS as a company with great potential. We have become its second largest shareholder and have helped this company fund its phenomenal growth. It has built and acquired a portfolio of more than 23,000 towers across 5 countries. It is the biggest tower co in Africa. It is the 11th in the world. Finally, Java House, those of you familiar with Kenya will know this company, which owns casual dining restaurants. When we took it over in 2012, it had 12 restaurants in Nairobi. We applied best technologies, carefully planned for expansion, and added almost 50 restaurants during our holding period. As we expanded into 5 cities in Kenya, as well as Uganda and Rwanda, addressing the needs of the growing East African consumer class. It had become the largest restaurant chain in Kenya when we successfully sold that company 18 months ago. Last quarter, we bought the second chain in Kenya, Art Cafe, and we're looking to replicate the same success. And by the way, I recommend that you try it next time you are in Kenya. All these are just a few examples of what the Africa growth story is all about. Of course, we had challenges and failures, mainly when we invested in startup projects and/or unproven concepts. Do you remember a company called TV Africa? Probably not. It was a short-lived flop. And please make sure not to ask me about Intercontinental Bank in Nigeria. I don't want to talk about it.
I'll cross that out.
And by the way, if anyone tells you he or she never experienced failures investing in Africa, you may wonder whether he or she is really doing PE in Africa, right? We had destabilizing moments due to political and economic events. Starting with the civil war in Côte d'Ivoire, where I lived, the post-election crisis in Kenya, the Arab Spring starting in Tunisia, where I lived again. I hope there was no correlation. And its impact across North Africa and beyond, the collapse more recently in oil prices, and its huge impact on some currencies like the Naira. That hasn't prevented this continent from being a growth opportunity overall. The average GDP growth of the last 17 years has been 4.5%, which is probably the highest among all regions in the world. However, geographic diversification when investing in Africa has to be kept in mind as a pillar of portfolio construction to absorb the inevitable shocks in regions at certain points in time. I told you about the way alliances with investors from the outside world and with African businesses helped us build a private capital success story in Africa. Interestingly enough, Africa is waking up to its huge potential. The latest alliance Africa is embracing is an alliance with itself. There is a growing trend of investors from the continent. We're experiencing this firsthand, and this might be the surest sign that private equity is becoming a truly African story. We recently announced the closing of our 4th generation of Pan-African funds, which has allowed to mobilize around $650 million. The participation of African investors was by far the biggest ever through pension funds, sovereign funds, family offices, and African development finance institutions, including the African Development Bank. This comes at a time when the amount of foreign direct investment in Africa has grown up significantly since 2000, but recent trends are worrisome. FDIs have declined by more than 50% since 2014. You can see the blue line is the evolution of the world FDIs. Africa at the bottom is a teeny fraction of that. It was 7 billion in 2000. It reached a peak of 46 billion in 2014, 2015. It's now declined to close to 25 billion. Out of these figures, it is estimated that African intra-investment represents slightly above 10%. This isn't enough. This figure must improve, and I'm convinced that regional integration initiatives, such as currency unions and common markets, will play a key role in rendering the funding of the continent less dependent from the outside and more sustainable. The continental free trade area, which is only 3 countries shy of implementation since Zambia joined at the last African Union Summit, is a decisive step toward a great trade alliance between African states with the ambition to build it on a Pan-African scale. I have described a few growth experiences, and there are many more, and several of my colleagues involved in the PE space on the continent could certainly share similar stories. Well, maybe not of my colleagues, but at least some of them, right? We know that digitalization, the pace of urbanization, the need for industrialization, the infrastructure gap will continue to offer tremendous entrepreneurial and investment opportunities. To realize the full potential of continental trade, we will need huge amounts of investments. There is one key aspect, and that's going to be my conclusion, which we collectively need to think about. This has to do with climate change, because it is a challenge we're all facing. It is a shared responsibility across continents between public policymakers and private sector operators and investors. Given the current demographic trend in Africa, every country will need to generate more revenues, more jobs, accelerate growth while preserving our environment. This is a call to forge a new alliance that has until now failed to materialize in the rest of the world. The same way Africa has experienced a leapfrog in the telecom and digital sectors, I'm convinced that Africa can be at the forefront of this evolution because it is free from old economic models based on heavy greenhouse gas emissions. I have seen hugely creative proposals and solutions emanating from talented African entrepreneurs. We collectively have to do something here, and I'm sure this pool of young, talented people in front of me will be instrumental in the process. Thank you.
Thank you, Vincent. It's a very inspiring remarks, and I think we'll have lots of interesting questions to go forth. Before I turn the floor over to Mr. Nguer, I wanted to acknowledge that yesterday, Vincent was in Daman, Saudi Arabia, because he's an oil guy.
Momar.
I'm sorry?
Momar.
Where were we?
Momar.
Oh, Momar. Oh, I'm sorry. Momar was in Daman, in Saudi, but you were in Saudi Arabia.
Yes, I was. I'm the one who was in Saudi Arabia.
Right. So, yes, I was about to give a shout out to you for going to Dubai, flying to Boston to be with us this morning, and he's going back to Paris today. So please, again, thank Momar for being with us this morning. Now, Vincent had all these inspirational comments, and then he's well aware that he's sitting next to an executive from one of the largest oil and gas companies in the world. That was a nice friendly handoff to talk about climate. So perhaps in your remarks you'll be able to talk about part of how Total is...
I warned him, right?
Yeah, I was on
in advance.
You warned me yesterday, late evening. And of course, I didn't have enough time to prepare my answers, but I will try. Thank you very much, John. I feel really honored to be in this beautiful venue with this amazing crowd in this very prestigious institution. The difference between those who attended Harvard and the rest is that when you attend Harvard, you have very nice slides when you make presentation. I'm afraid there'll be none from my side.
Some people say the presentation is inversely proportional to the content.
No, I'm sure that. I just wanted to share with you some, and I'll be much shorter than Vincent because indeed he did cover a number of things I want to talk about. But I wanted to maybe share some thought with you about Total, about Africa, and try to explain the reasons why a company that is fourth or fifth, depending on the figures you take, has more than 30% of its capital expenditures into Africa. And we've been consistently investing more than 30% per year into Africa in total. But first, let me maybe say some few words about who I am. I graduated from a French business school, a very small French business school. Then I joined Hewlett-Packard in Paris, doing finance. And I spent 2 years there and was about to be posted to Palo Alto when got a call from someone from Total and who eventually convinced me to join Total. And the main reason he gave me then was that, listen, if you join Total, one day you'll have the opportunity to work for Africa. And that's why I left age 26, probably a career in HP, which could have taken me probably to California to join Total. The funny thing is that 1 week after I left HP, I went to see the HR people in Total. Now, and was told, okay, now, young man, you're going to join this company. We need to send you somewhere in Africa, to get some induction. And probably you'll go to Gabon next week for 1.5 years to do finance. You're going to be in the cost control team. Fine. Well, I'm a Senegalese born, so Gabon for us is pretty far, humid, rainy, something quite different from Senegal. I said, okay, well, I'm going to go to Gabon next week. 2 days later, I was called and I was told, no, afterthought, you're going to Cameroon, not quite the same place, and you are not going to do finance, you're going to do marketing. That's how I started my career in marketing, and that's the reason why I've been in marketing for more than 36 years now. I was then the first ever, imagine this was 84, I was the first ever African recruited in Total Group. Till then, Total would send expatriates to Africa, and they will hire quite low-level staff locally. So all the positions in the company were filled by Europeans, actually, expatriates. So I was I was sort of experiment. So they sent me in Cameroon, say 1.5 years there. I think things were going very well, and they said, well, okay, maybe there's a trick here. Let's send him to Senegal. We'll see how he'll adjust to Senegal. I was sent to Senegal, spent 5 years there. Maybe they thought then, and that is true, I was about to join government then, and then I was called back to head office, spent some years there. Then in 94, I was called and I was told, you are going to be sent to South Africa. And you are going to
94.
be... 94. You are going to be the first black senior executive in Total South Africa. 1 week later, it did change. And the then CEO of the group told me two things. I'm not going to take risk with you, because I have a double opposition in South Africa from the unions, the white unions, and the black unions. The white unions saying we are not going to accept the black men here in the top, among the top executives, and the black unions saying if we start having other Africans, other top executives from other African countries, this company will never do what it needs to take black South African into these jobs. So I didn't go to South Africa. I landed in Cameroon again as managing director of the company in Cameroon 10 years after my first visit there. Spent there 2 years, then moved to Kenya where I spent 3 years. And Vincent is right, by the way. Java Cafe is a very nice, That was, if he had told me that he was about to buy that one, I would have invested personally into Java Cafe. Now, enough with me. Let me tell you what the link between my company and Africa. We are, in total, the largest producer in sub-Saharan Africa. We are pumping 600,000 barrels, which is slightly less than 1/5 of our overall production. On the marketing side, we command 70% market share in Africa. We have more than 4,000 service stations in Africa, and we are by far the largest retailer in Africa in terms of number of sites, all business included. I think the second one is ShopRite. There's 100,000 jobs in Africa linked to my business, 10,000 direct jobs and close to 100,000 indirect jobs. When you're a company like an oil company, you are a long-term investor. It takes between 7 and 15 years between the day you find oil somewhere and what we call the first oil or the first gas. Between the discovery, we made a discovery in South Africa 2 weeks ago. It will take another 7 to 15 years to start the production. Then you are going to produce for between 15 and 20, 25 years. So we are long-term investors. We've been in Africa for more than 90 years. The question for us is, when you're a long-term investor, how do you manage your horizon? I'm not investing for 5 years and then do an exit like Vincent can do. I'm not a short-term investor. So I need to see how I can accommodate changes in regulation, how I can engage with people, and not only governments, because governments would come and go. I have to entertain good relations with government, of course, but that is quite straightforward. The question for me is how to get accepted in countries where I am and where I'm going to operate for the next 20, 25 years. And I think that the difference between us and some of our competitors is that we've been able to manage that quite successfully by building partnerships. And I'm going to just tell you a few examples of what we are doing. On the retail side, because that's the business I'm more familiar with in the company, though I know a bit, of course, of E&P and gas. In the 70s, in the 80s, I told you we have close to 4,000 service stations. Now, up till the 80s, the service stations were managed by dealers, because most of those sites belong to us. So we will hire dealers who will come with the required capital invest in the working capital requirements, then finance the working capital requirements, and then run the service stations. Those dealers used to be quite wealthy African or expatriate businessmen. The issue was that they were having multiple businesses. So we decided in the 80s that we really need to get local people running our service stations. So we got into a program that is called Young Dealer Scheme. Basically, we would go around, identify pump attendants. I'm really talking of pump attendants. Those people at the pump who are serving customers would identify some of them that are hardworking. We'll train them, and we'll fund them. And we'll give them between 4 and 7 years to repay the loan through the proceeds of their sales. Today, we have more than 80% of the dealers of our 4,000 service stations were former pump attendants. Some of them didn't ever get to university. Most of them are dropouts of secondary school, but they've shown a lot of will, and we took the risk. We agreed to take that risk, because you need to, that's what it takes. You need to get that input from the company when you have the good pool of talent, and these guys are really talented. That's one thing I think we're very proud of in Total. The other thing is management of our affiliates. When I was appointed managing director of Total in Cameroon, I was the first ever black African MD in the Total Group. Today, we have 40% of our MDs in Africa that are locals. We set up that program some years back. We are quite happy with that. There was this feeling in the Total Group when I joined that there were risks because if you have a local MD somewhere, they may be too close to governments. The issue with oil is that most government is not only is the regulator, but sometimes government is also involved as investor in oil. So in order to avoid that too much proximity between the MDs, but that was just ridiculous, because at the end of the day, when you take an Ivorian who is 40 years old, make him the MD of Total Ivory Coast, of course he's going to deliver as well as any other expatriate you may send there, knowing that, you know, after 4 years you'd move to Senegal or to Kenya. So that's how we came over that, and today we have more than 40% of our MDs that are local. So second lesson, get local people involved into the business you're doing. Third, look at what you can do beyond your company. There's one thing we did in the group. You know, when you attend university in Africa and you graduate from an engineering school or the business school, probably out of the 5 years you spend in university, you'd have had 3 months internship overall. Because there's not that much job. There's not that much possibility for internship. We all know that. So we decided in 2014 to launch an internship program in Africa, young graduate program. Today we've enrolled more than 400 students, went through that program. You spend 6 months into your home country after you graduate from university, if you join the program, and we give you the opportunity to spend 12 months in another affiliate of the Total Group in Africa. Now, all those things may be quite basic. They're not rocket science. However, when I look at Africa today and when I look at the way, for example, Chinese companies are behaving in Africa.
How's that?
Well, you say, well, okay, there are things that you need to keep repeating and repeating again. Chinese contractors would come to Africa today, get contract to build roads or plants, thermal plants, and they would come with 100% of the staff from China, including people who will be growing vegetables for them in the compounds. They'll be Chinese. Now, no wonder there are issues, for example, in countries like Zambia, between Chinese contractors and not governments. And again, the question is not how you interact with government. The question is, how do I interact with the local people? And no wonder if Chinese company in Zambia, and now they are starting to get the same issue, have issues with local populations in some parts of Africa.
So you're talking about Chinese. The implication is that the Americans and the British and the French have always behaved great in Africa?
I think some of them probably learned the hard way, but now they've learned the lessons. So they have a different way of, handling relations. And I think that they managed to accommodate probably more what people think. And let me just finish with 2-3 things, because I don't want to paint Africa as too rosy.
People always do that.
No, I'm not going to do that. And of course, being a company with a very long presence in Africa, I know that we have still this issue of corruption, which we really need to fight in Africa. Not that companies like the companies Vesa is investing in, or my company, do suffer from that sort of a thing, to be honest, because we are too big. We are too big to be subject to that sort of the pressure. But the small businesses, all those small business of 20, 30 people that you need if you want to build an industry, are the ones suffering from corruption. You have the issue of corruption. There's the issue of the population. Nobody will ever convince me of anything like the demographic dividend. I do not believe in that. I do not believe in things that you cannot have a control on. It doesn't work. For as long as governments will be dedicating more than 70% of their resources to satisfy the basic needs of the population, we are going to have issues with growth, with development. Because you cannot deprive people from those basic, you need to provide them those basic services. Because you are not going to say, I'm going to provide to half of them and the other half will be left out. So the only term of the equation you can work on is the other one, the number. So we need to do something about that. And one way to probably address the issue is to work hard on education, especially education of girls. Let us give to girls the choice to go to school or to get married. And those who today are telling us that in Africa, don't think about that. You have this demographic dividend coming in. You are going to be twice the number you are today in 2050. Fine, that's just a joke. Because if we double in 2050, then 90% of our resources will be devoted to building schools, hospitals. Nothing will go to building roads. Nothing will go to building ports. Nothing to go to what will generate development. The third thing, and I'll end with that, is the shortfalls of democracy, the shortfalls of multipartism. And the hiatus that is happening now between rural and urbans in Africa. In the cities, elections are transparent in Africa. In 90% of the cases in Africa today, elections are quite transparent.
Not necessarily on time.
But you can postpone elections for good reasons. You can postpone elections for good reasons. Imagine I have a friend who was Minister of Interior in Cameroon, and he had to ask the president to cancel elections the very morning of the election day. At 6 o'clock, he went to the president's house to get him signed the decree that was postponing the elections. So sometimes it's for good reasons. No, the reality is this. In the cities, they vote. In the cities, they vote. In rural areas, they don't vote. Now, if you are a politician, you will try to satisfy the needs of those who vote. What does that mean? That means that you are going to provide electricity in towns, in cities. That's why Vesa is making a lot of money out of his business in electricity in Africa. Because if you don't provide electricity, first they are going to be unhappy, they are going to burn cars on the streets, and they are going to vote for opposition. So you build roads in cities. Sometimes you accept to put a subsidy on price on electricity, subsidy on fuels, or very low taxation of fuels, because you want to satisfy the urbans. In the meantime, when you talk to people who are in the fertilizers business, they will tell you that today in Africa, most of the fertilizers we are using are outdated in terms of the chemical process because they've not been upgraded, they've not been updated. There's very little investment into fertilizers. In most countries, fertilizers are not subsidized. So you are creating an issue between urbans and rurals. And one day, we are going to end up with what you in the States you call the hillbillies, and what in France we call the yellow jackets. Because you are going to have part of the population that will be very unhappy, that will feel they are left out, and the privileged ones are the ones in the cities. One of the reasons why we had this issue of yellow jackets in France is very simple. Government 1 year ago decided that we are going to reduce to 80 kilometers per hour, speed limit to 80 kilometers per hour in national roads instead of 90. For me, living in Paris is pretty nice. In Paris, I never drive above 50 kilometers anyway, and I do not travel in rural areas. But people living in the rural areas, they have to commute, driving. 50 kilometers morning, 50 kilometers evening. Those are the ones likely
Well, you expressed
to
that
have
as a
issues.
speed limit. They also increase the price of your product.
No. The prices of oil, not my product. The prices, the pump prices, because, and that's what, it comes to the issue of climate change. the previous government in France decided to put a tax on fuels to reduce consumption of fuel in France. President Macron, when he came in, endorsed that, except that that was done at a time when prices of crude oil were very low. Now, government had to deal with those taxes, which were on a trajectory that was put by the previous government, and crude oil prices going up. And that's the reason why, throughout this yellow jacket stuff, they never burned any of my service stations in Paris. Thank you very much.
Thanks. But let me ask you a couple follow-ups, Momar, and then we'll take questions from the audience. Are there microphones out here, or I guess we'll just call on people? I want to back up and ask sort of a little more personal question. You talked about acceptance several times, and whether you'd be accepted in Gabon. You certainly talked about personally, would you be accepted in South Africa? You talked about whether the company would have sort of acceptance and license to operate in various countries. And now you're, I think you're the only black person on the management committee of Total in Paris. Do you have general guidelines or rules for how sort of an outlier person like you gets accepted? Or how your company gets accepted?
My company, well, I think that, but I joined in Total at a quite different time. And because I was the first, I had to probably work harder than the rest of my colleagues. I had a stroke age 45, which is quite unusual. And probably that was linked to the pressure I was taking on. What kept me moving was that I've always had the impression that if I succeed in what I was doing, then it will open the door for a number of guys who were younger than me in the group. And that's what kept me going, you know? That's what, that's what keep, yeah, that's what fueled my career. And today, not only I'm the only, but I'm the only one in the 40, the CAC 40, which is the 40 top companies in France, listed company. I'm the only African. The companies are more diverse in terms of gender. They are not diverse in terms of origin. Now, when it comes to the company, I think that, you know, the relation companies may have with Africa, again, the important thing is when you're dealing with, in countries, you're dealing with government. But more and more, behind the minister you are signing a contract with, there are millions of people waiting to see what you are going to do for them. You know, the oil industry is an industry that is not creating a lot of jobs. To produce 100,000 barrels, I do not need more than 200 people to produce them because I do produce offshore. So I don't employ much people. And to create one GDP point in the service industry, in agriculture, you employ thousands of people. I do not. Now, even if I contribute in terms of GDP growth to a large extent in a number of countries, it's only by way of paying taxes to government. Now, if you're in a country and you tell to people, okay, you know, in this country, 60% of my revenues are going to government in form of taxes, they don't care about that because they consider that the government is not making proper use of the money you are giving to them. So they need to see what is in it for them coming from you. And that's how you get accepted.
Mm. And part of that you explained really well in terms of turning the pump attendants into entrepreneurs. And I think you said you created tens of thousands of entrepreneurs on the ground. who I assume some of them then use that business skill to go on into other businesses. Let me ask you a question about the people thing. They clearly at Total have brought some of those people up within the organization. One of the stories about Africa is a lack of management talent and leadership talent. And how do you look at that in the companies? And thinking about some of these businesses like the restaurant business, obviously it's all about people, not so much the energy business. How do you address when you drop people in, when you train people up, how you deal with them getting poached, those kind of people issues?
Sure. Well, one of the first things we're trying to achieve is proper alignment of interest, as we've learned here. If I look at Eranov, this is a company we acquired from Bouygues, the French CAC 40 company, which sold its utility business back to 2005, 2006. And the buyer was not interested in African assets. Too far, too complicated. So we had to transfer these assets almost overnight in an SPV, French SPV, which was available. So that made the opportunity for us. And I thought there were fantastic skills and talents in the operating companies in Senegal and in Côte d'Ivoire. And I really wanted to create a regional champion based on the expertise, and I wanted to export the model they had successfully developed in these countries.
And you thought there was some talent existing in those, companies?
Absolutely.
That's not what I thought you were going to say. I thought they spun it out because they didn't have good people.
They were in these companies. And I knew that for a fact because I was coming from Bouygues myself, having spent 6 years with these companies. So the first thing I did was to rebuild the shareholding structure of that French company when we took it over. Because if you want to create a regional champion, African have to be part of the capital structure. Otherwise, that just doesn't work. So we allowed the employees of the operating companies to acquire 10% of Eranov's capital through their pension funds.
So you lent them the money, or they get over time. They didn't have to come up with it.
No. They paid right away, 10% with the pension funds they had. The second thing we did is that we created a stock option plan, allowing 20 managers, most of them, 95% Africans, to acquire stocks over time based on performance. And the third things we did was to allow African investors to invest in that company. So at the end of the day, we had a pool of 30% of the equity, which was in the hands of African investors, be it the employees, the managers, or family offices and whatnot. So that's how you align interest. And people are extremely proud of their investment, of having a stake in these companies, which has always been owned by foreigners. And when we had to face the civil war in Côte d'Ivoire, our assets were the most protected because the people took care of them. So we had talents, we gave them responsibilities. None of our CEOs of the operating companies, be it the electricity company in Côte d'Ivoire, the water company in Côte d'Ivoire, the water company in Senegal. We have an IPP which is 500 megawatts in Côte d'Ivoire. All of them are Africans. So that's how we've dealt with the matter.
Does every investment company share the ownership like that? And do you think it's an advantage in recruiting that you can get better talent because they get a piece of the deal?
Yeah, of course. And we never had issues hiring talents. African talents, be it people who were operating in the region or being people part of the diaspora.
You never had issues. Are you able to find the skills?
Yeah. The only issues we had...
That's not the conventional wisdom.
The only issues we had was in countries like who had just transitioned from socialism to market-oriented economies, like Algeria, for instance. For a period of time, it was very difficult to find talents over there, and you had to send expats. Things are changing for the better. We actually have a company called GAM, which is an insurance company, which we own 100%. It's been a difficult investment because the turnaround has taken more time than expected. 7 years ago, or 8 years ago, we recruited a young woman in the financial department. She has climbed the ladder to become the CEO. She's done a wonderful job over there. So things are changing, even in countries that were at a disadvantage at some point in time. But we never had issues finding, attracting, remunerating the best talents for our companies.
So, of course, the question they all want to know is, when you hire fresh MBAs, how many options do they get on day one? That might depend. Let's collect some questions from the audience, and I'll try and collect 3 or 4, and we'll synthesize them and turn them back to our panelists. So I guess there's not microphones. Yeah, so you may just have to sing it out. Hand mics or on stands? Oh, okay. So go to this. So,
Yeah, there are mic stands all around the room, so you can just approach them and wait for your question to be
okay.
answered.
And I guess there are 4, right? So in that case, let me go way up to the top and take the first person in line at that microphone. Or you're just standing there watching the show. Okay. Yeah. So let's go down here. Take the first person in line at this microphone.
Hello? Okay. All right, so
tell us your name, where are you from?
Not a problem. My name is Joshua Boyd. I'm a grad student in the Harvard Extension School, student president. And it's a pleasure to meet you, Professor MACOMBER. I remember I saw you in Lagos, Nigeria, when we did a talk at the business school. I was the only American guy there that we spoke, we met afterwards. So, so my question is to—
But not a Patriots fan, in my recollection.
No. My question is to both the keynote speakers. For young entrepreneurs who are looking to come to the continent to start something, I know from doing private equity, bringing it to the continent, being in the oil and gas, and just what it takes to get a business off the ground. What is some key advice you would give to an entrepreneur coming into the market today from what you observe and you realize that is going on? Exactly how to get it off the ground, and how could they make it successful in today's market? Okay, so some startup advice for new entrepreneurs. Excellent. Now let's go to a question from this microphone.
My name is Nosa. I'm a second-year MBA student from American University in Washington, D.C. My question is for Mr. Vincent. ECP has done a great job. I imagine that the folks at ECP have been tasked with making returns on the funds that they get from these pension funds and their investors. But given that the investment landscape is changing, is there any strategy or a future fund to invest in small businesses? So investments within $100,000 to $250,000 range. Most of your businesses are in the millions of dollars, $100 million in very large companies. But just like Mr. Momar said, looking at the long-term impact in creating those companies, in those small businesses that just have 5,000 subscribers and not 40,000 like Mr. Mo, is there any strategy to invest in those businesses, a number of them that will eventually lead to them scaling to become big businesses in the future?
Good, thank you. So another startup-y kind of question. Good. Let's go back over here.
Hello, Ali El Kamal. I'm the chairman of the Association of African Business Schools. I'm from Morocco. I just want to make sure to straighten up the record in terms of the Arab Spring. I saw the Moroccan flag there. We didn't take part of that. But, about the education and talent acquisition, you both talked about the importance of education. What do you guys do to lift up the quality management education in the continent so that history would not repeat itself and Africa would be transformed into a pie again?
Very good. To management education. There's another one over here.
Good morning. I'm Naila Opianga from Gabon. So I want to thank Sir Nguer for shouting out my country. I was really happy and proud.
For shutting out these.
My question is for Monsieur Vincent Le Guennou. You mentioned in your presentation, you had a part about climate change. Last October, there was a report from the IPCC in the United Nations about the effect of climate change in 2030. I wanted to know what is your investment strategy when it comes to climate change, and what are the actions that you're taking for future potential startups and the current ones on ways to prevent and or adapt to that?
Thank you for that question. So let's go in backwards order. From that, let's because you kind of got away from the climate change question for the first hour. So we'll bring that back. And then there's an education question about management skill and talent, and then 2 questions about smaller companies getting started. So the question was about the IPCC report in October and what's Total's role? And I think this question actually was nice. It was, what's your investment strategy? It wasn't like, aren't you awful? So that's good. I personally am a user of gasoline, so I don't really feel like I should critique.
Well, we've, you know, the issue, and I was just reading something on The Economist on my way from Dammam on climate change. The issue with climate change is that somehow, one day, someone has to pay for it. We all agree now that there's an issue with climate. When you look at the scenario, and we really did work very hard in Total in the last year to have a proper outlook of what the future may look like. Today, we are producing, the world is producing 100 million barrels per day. If you take an extreme scenario where you say that come 2040, you are going to have 50% of the new cars coming into the market that will be fully electric, not hybrid, 100% electric, which is an ultra bold scenario. 50% of sales. And when you look at what the magazines are talking about today, they are talking of 15 to 20%. So we took the scenario, an extreme scenario. If you take that scenario, you are going to have an increase of 10% of the production, the demand in 2040 as compared to 2017, which means that in no way are you going to change the scenario. And that is quite worrying. With 50% of the fleet being electric, we will still have an issue with carbon emissions. Now, if you want to change the trend, somebody has to pay for that. Much as we may say today, each of you is aware that there's an issue with CO2 emissions, less than half of you are willing to pay to change the course. You know, take a country like South Africa. 70% of their production, of their primary energy is coal, because they are the 7th largest producer of coal in the world. Now, go and tell to the government of South Africa, and the CO2 emission per capita in South Africa is 70% above the average of the world per capita CO2 consumption. Now, how are you going to explain to Cyril Ramaphosa that he has to stop using his coal to produce electricity for people in Soweto? Who is going to pay for that? We should be prepared to pay for that. Because the emissions of South Africa are not limited to South Africa. Otherwise, you may say, well, okay, that's your business. This is the business of all of us, and someone has to pay. There's no other way.
So without spending the whole rest of the time on climate, when I talk with the MBA students here, that's largely the trade-off is there are 2 billion people who are going to go to bed tonight hungry, cold, with no lights. Is it more pressing to solve that problem now and worry about the other problem for my children and future grandchildren? So we could go a long way in this. There are other panels today that talk about climate. Let me segue away from that. You actually were, you did not point out how much cleaner natural gas is than coal, and you could have as a substitute. So that's also true. And Total is, I don't believe you're in the coal, I think you don't have any coal assets.
We sold all the
coal.
assets, just before the Paris 21.
So you divested all the coal. Harvard hasn't yet, but you divested all the coal interests.
We did.
Management education. So the question was about teaching about management education. And of course, it came from a gentleman who runs business schools. I'm curious about how you feel about, both of you feel about management education that you do in the companies that you think management schools should do, or if you think it's more of a basic education question on the ground so that when people come in and they're pump attendants or something, at least they can do math. Do you have a position on whether your companies have to educate people, or what would be the most effective way to teach people about management?
Well, on management, I'll leave it to the Harvard graduate to talk about education management. I'll be more talking about what we need and what we are investing in, and we've started doing that in Africa, and we're going to start some schools in France. That is vocational training, because that's one of the things we really need in Africa. You know, vocational training can't all be, and try to see how you can make these things attractive for youngsters. And we're about to build a big campus in France to attract those people.
In France?
In France and in Africa, we've invested into a number. We've supported a number of schools in that. And personally, I'm one of the first investors of ENCO Education that has been created by one of your graduates. But that's a personal investment, because I do believe that vocational training and primary education are key. But
Yeah, our position is slightly different. Obviously, we're short-term investors. So when we invest in a company, our priority is not necessarily to create schools or academy or universities. We just don't have time for that. Our holding period is somewhere between 4 and 6 years. So we're not the right candidate to develop this type of businesses. However, we invest in universities because clearly we've identified the huge gap between the number of high school graduates which will come on stream over the next few years in many African countries, and the governments won't have the ability to train all of them, so the private sector will have to play a role. So we have invested in 2 universities, one in Uganda, one in Zambia, and we hope we will be able to add a number of campuses in Francophone West Africa in the very short term. So we're a strong believer in education and as an investment thesis. So that would be my response to it.
Then there were a second group of questions for you, Vincent, around smaller businesses. So I don't remember what your ticket size is, but it's probably $5 or $10 million to invest.
Unfortunately, it's much more than that. It's actually $50 to $100 million.
Well, you know, when you raise $500 million, you got to put it to work. It's hard to do. So then the obvious question is, what's the source of funding? What's the source of traction? What entrepreneurial ecosystem helps these little startups?
Yeah, I've not found the solution, and it's a bit of a frustration, because we all know that entrepreneurship and startups are necessary on this continent. And aside for personal initiative or personal investments, the same way Momar described his commitment to ENCO Capital, this is the things I kind of like to do. But from an institutional standpoint, we've not found the right economic model to make it sustainable. You have to have a fund of a certain size if you want to make it economic. But if it's of a certain size, then you end up investing in a multitude of startups. How do you monitor? How do you follow? How do you add value? We've not found a solution so far, and we're not the good candidate for that matter, unfortunately.
I've run into several funds who think they're going to invest in smaller companies and take a portfolio approach, and some will do well and some won't, and they'll aggregate all those hoped-for dividends and somehow package that. Do you think that's a plausible model?
Well, we actually encourage some of our portfolio companies to invest in startups. So for instance, Eranov is investing in startups.
Your portfolio company is investing in startups in turn?
Absolutely. So Guerra, for instance, has invested in 2 startups recently. One is smart energy, trying to make buildings more efficient from an energy consumption standpoint. That's in Ivory Coast and West Africa. It also invested in a company called Awale, which has installed a fiber optic network on the electrical grid. So this is the kind of initiative we can have through our portfolio companies.
So in the United States, a lot of people become entrepreneurs who are becoming franchisees, say of McDonald's or Burger King. Do you think that the gentlemen should be franchisees of a Java House or franchisees of Total? Is there a way for, I mean, all of you are MBA students, you don't think you're going to go own a gas station, but it's actually a pretty good business. Is there an opportunity for entrepreneurs in that regard?
Yeah, but I'm not sure that this, as I can see them, I'm not sure that they will be willing to work 7 days a week, 24 hours, and you know, the quite dirty service stations. No, on a more serious note, yes, we expect to have more and more people like your graduates because our service stations are changing. You know, today what I'm selling more mobility services than I'm selling fuel. You know, that's what people are.
What did you say?
Mobility services.
What's
you know,
that?
Well, it means that okay. Well, when you call in my service station, you should be able to buy fuel or to charge your car, or to get a car that is part of a car sharing system being parked there for you, or you know, that's the sort of services I'm selling in my service station. Make it a one-stop shop for mobility. So you need people with, you know.
Well, around here, when I go to the mobile station, there's also Dunkin' Donuts, lottery tickets, beer, and cigarettes.
Well, I thought that the U.S. were more advanced than that. If you go to my service stations in Africa today, you can because we've invested into a company that's called InTouch. If you go to my service stations in Ivory Coast or in Senegal today, you can pay your electricity bill, your water bill. You can buy a ticket, you know, in the service station. So you can do a lot of things and leave the station without fueling.
John, I'm not expecting these crowds to become franchisee of Java House.
They don't look like.
And I'd rather have them think about building the next Java House somewhere else on the continent so that we can invest alongside these guys and make money all together.
Great, excellent. Other questions? Let's go over here.
Hi, Akoko Muketa from Cameroon. Vincent, you mentioned currency union initiatives that help private equity practice in Africa. These typically help with cross-border flows and intra-African trading, as you mentioned. However, the biggest trading partners for CEMAC countries, for instance, are China and France. Given that all these countries have different levels of development and economic profiles, do you feel currency unions allow for developing countries to grow sustainably?
Is that a question about France and Germany, or is that a question about?
France and Italy.
So why don't you go ahead and take that now, Vincent, but around whether nations can trade together with all these different currencies.
Well, and this gentleman being from Cameroon, his currency is the CFA franc, which is a particular animal, right? And I'm not sure everybody is familiar with how the CFA franc works, but you have 2 economic zones, one in West Africa, encompassing 8 countries which have the same currency, called the CFA franc of West Africa, which is pegged to the euro, and that's probably what the issue is all about. This country have one central bank, one banking commission. So it's pretty positive when it comes to creating markets of scale. With this currency union, you have access to a market in the banking sector, which is 80 million inhabitants. Otherwise, you would not invest in Togo $15 or $100 million because it's too small a country. I think these countries having a common currency is not an issue. I think the real issue is the peg to the euro. I think it's no longer taboo among the political class. At some point in time, this peg is going to disappear. But I would still be an advocate of currency unions because I think, again, it creates a bigger ensemble, synergies, it facilitates trades among these countries. And the same currency union which exists in West Africa has its exact same replication in Central Africa. It encompasses 6 countries, and it's called the CFA franc of Central Africa.
Right. Up here.
Hello, my name is. This on?
Yep.
All right. My name is Mashar J.B. Frierson, and I represent the Sunja Group. And I actually have a question for both you gentlemen. So for Momar, it's sort of granular, but how are you managing and hedging the legal and political environment from country to country? How does that infrastructure from a granular perspective work? And then for Vincent, are you seeing any competition with your deal flow? And also with sovereign wealth funds managing trillions of dollars, when do you expect these entities to increase investment with you and other Africa-based funds?
That sounds like three different questions.
It's
So in
compounded.
5 minutes, can you describe your entire legal strategy in 54 countries based on? But there might be a highlight. Like, is there a way that you think about license to operate and legal questions and dealing with them in each nation? Or is it very much sort of a respond to a situation issue in your general counsel's office?
On the legal issues.
This question about legal risk, the question is about hedging legal risk, which I guess is around changes in laws.
Well, let me tell you one thing. When it comes to legal risk, I think that the risk is really, I say that, overweighted when it comes to the African countries.
Yeah. People worry about it too much.
No, too much. I've been working for more than 35 years in Africa, dealing with Africa, and I've never had a legal case with governments that has not been resolved properly. Doesn't mean that I've always won the cases, but really I've never. I mean, and when you look at for example, cases of expropriations. Where have you seen a company that has been expropriated unduly in Africa in the last 20 years? In my business, we've had a number of things of that sort happening on the American continent. We've never had that in Africa. I mean, and you have the arbitration clause in our contracts, and they do work. So we shouldn't worry much about that. There's one thing that is, there's the legal risk and the political risk. The political risk is something different. But again, when you're a company of our size, you have a portfolio effect, which means that, okay, when things were bad in Zimbabwe, they were pretty good in Ivory Coast. Just to mention two countries. When they were very bad in Ivory Coast, things were pretty good in Kenya. And when they were bad in Kenya, and we have that portfolio effect. But for the rest, for the legal risk, really, I think that we do not really worry about that. I think my general counsel is spending more time dealing with what's happening in some countries south of the US, than with our African business.
Did Total have assets in Venezuela at one time?
Yeah, we do.
Still does? Today, anyway?
Yeah, we do.
Yeah, so today.
I think my general counsel is busy handling that.
So, Vincent, there was sort of a two-part question, one around competition for deals, or deal flow. Do you have enough deals at your ticket price? And the other piece, I think, was around capital and whether the sovereigns invest directly and bypass you.
Yeah, I'll add one point to Momar's comment on the legal issue, and that takes us back to the importance of regional integration. And again, I'm going to be an advocate of the Francophone world for a moment, but it's just for the sake of explaining what's going on there. 17 countries or so, Francophone, have developed a common framework of corporate laws underneath the OADA, meaning that the corporate law is exactly the same in Senegal than it is in DRC, which provides with a sense of continuity for businesses who want to expand in the region, and that's fundamental. And there is, as part of this initiative, an arbitration court, which sits in Abidjan, which is functional. It works. So that was just my 2 cents on the previous topic. Competition, we never had when we source transactions, it's really proprietary deal flow. So there's not much competition about that. It is also part of our investment strategy. We have 6 offices on the ground, which makes it distinct from the competition maybe. We're solidly entrenched into the business communities in hub economies, like Côte d'Ivoire, like Nigeria, like Cameroon, like Kenya. So we can identify early on who the next champions are going to be. And that's how we developed our portfolio of investments. Now, if you take a macro level, there is absolutely no reason why there should be too much competition in private equity in Africa. When you look at the penetration rate of private equity, it's so small. Penetration rate meaning funds raised by private equity firms over the GDP. It's very small compared to Latin America, Asia, et cetera, et cetera. So far, we're doing well in terms of competition.
Great, thank you. So this has been a fascinating talk, and I'd be happy to do this for quite a bit longer, although some people probably are ready to stop traveling. So thank you for that. But this to me has been quite an interesting, it started out as a juxtaposition, but there's a lot of commonality around the fuel and the finance, or is the access to capital or access to energy the issue? There's a lot of commonality there. There's a very long-term strategy, a relatively short strategy, also with commonality, but mostly what I hear from these gentlemen is determination and dedication and caring. So please join me in thanking our panel today. Do you want us to come down, or should we sit here?